Eric Muathe at muathe.com with the weekend world market analysis for the weekend of March 5th and March 6th, 2016. Let's take a look at markets here. We begin by taking a look at how Asia closed. Pretty much we can say positive close across the board on most of the Asian markets after a good week. Take a look at European markets for the week. We had a nice close on Friday, so closing higher for the Friday session after also another nice week in Europe. We take a look at the Americas with about 3 hours to go or so for Friday's close. We can see that Brazil is up 4.5%. Canadian market is up 1%. Other markets are also positive. As of right now, we are looking at the US market with 3 hours to go, and they are up also about 0.5% for the day. Crude oil is up about 3% and gold is up 0.99%, and again 3 hours before the close. So let's take a look at world markets. And what you're going to notice in all of this video, in fact most of the world charts right now have extremely powerful looking monthly charts. The problem is we've run into some type of weekly resistance across the board, and I'll discuss that. So monthly charts look very good. Take a look at the Australian market. If you draw a line somewhere around here, now this line happens to be at about 38.2 on the monthly chart. We can see that we've been using this over the last 20 years, 25 years or so for nice re-entry. After a major bear market, like here we had uniform activity, the double bottom support for the lows there in 2001. This is uniform action below the green line, back above it, which is a re-entry for the markets there in 09. Double bottom support here, late 2011. Another support on the line in 2012, and now we seem to be forming a double bottom, which might suggest around here. Monthly charts by themselves are suggesting month to month we might have changed the equation to a market that wants to move higher. So the monthly charts look absolutely powerful pretty much across the board. Take a look at the weekly, and as I discussed, the weekly is coming into some type of resistance. And for example here, as far as the Australian market is concerned, take the highs on the weekly chart and extend them. You can see right now we are coming back to test that blue line. If we can't move above the blue line, that might be a problem, suggesting that we shouldn't be too surprised after a nice gain this past week that the next swing trade is going to be down. Also, we come to test the previous break line on the weekly. As you can see, there was a break here. That break in May brought the market off the highs there, and we can draw a line from there which should tell us where the market should stall, and it's been stalling over the last 6, 7, 8 months. As you can see here, double top on the red line for the highs there. Again, we touched that red line, which also happens to be rejection around the 50 RSI level, which is a mark of a bearish market. Again, for those highs, we touched that with uniform activity for that high late December, and now we are coming back to test that same level. So if we cannot move higher in the short term, the next swing trade based on this chart is higher. Otherwise, if the market truly wants to move higher, it needs to take out the red line and also needs to take out the blue line. So for markets to be truly in a bull market recovery phase, we need to be above those two lines. Since we closed exactly on the two lines, we have to wait and see which way the market wants to go. Take a look at the daily, and the daily here does show short-term resistance also, because if you take a look at the line connecting 1 year daily RSI highs and extend it like that, you can see it connects nicely with recent highs here, this high in December, and now coming back to test that level. And there's also another line coming back somewhere around there. This line so happens to be slightly below 61.8 on the daily. So you can see that the daily charts do show that around here, after a nice move off the lows, that we are coming here now testing where the market should actually find resistance. So if we cannot move above this level right now, the next swing trade is down. Otherwise, bulls would like to see a continued move higher, and for that to happen, the market needs to also break out above those two lines. Since we closed on the line, we have to assume that net more than likely, initially we might have to find resistance before we can move higher. Let's take a look at the Hong Kong market, and as you can see on this long-term monthly chart going back to 1990, there's a simple line of support on the monthly connecting 09 lows and late 2011 lows, and now connecting with that level there. That's very good support right there, good support this past month. And as long as that's the case, one can assume that this market actually wants to move higher. There is also another line which has been used by this market going back many years, and it's a line somewhere around there. And you can see the lows here in 98. After a big correction in 98, market held there. The market held the same level here during the lows here and went on to a major bull run. In 09, 08, it held there with a double bottom on the line for the lows there, major lows. Again, we touched that same line for the lows there, and now coming in 2016, we seem to be holding. So again, we see that the monthly charts by themselves are suggesting that month to month, there is a good chance that the market is actually positioning itself net on a monthly basis. Markets are positioning themselves to go higher as long as we are seeing the support on the monthly RSI. Yet for the here and now, if we take a look at the weekly, I think the weekly, in my opinion, is coming back to test recent break levels. Let's go back about 5 years on the weekly. I'll show you what I mean. And you can see here that I think what's going on, in my opinion, to be consistent with other markets, is there was a break here sometime in July. So this break in the RSI brought the market off that level. We haven't been back there, and I think what's happening here is the market is coming back to test that break line. You can see since the break here, we've really not been able to move above that break line. Even in December, we hit that line off the highs there. Now we are coming back to test that level. I think that might suggest there could be a little bit of a problem clearing that resistance. So net, if we have resistance on that level coming into the new week, resistance there would suggest that maybe the next swing trade is down. Let's take a look at another market. Let's take a look at the KOSPI. Excuse me there. All right, so let's go to the long-term monthly view for the KOSPI, and just to be consistent with other markets, you can see it is actually holding very well. If you take a look at the monthly, you can see around here is where the market has been finding long-term monthly support. It held here. It actually broke out above that short-term level sometime in 01, 02. That was a good entry there. It bounced on the same line for the lows in 03. Uniform action below the green line and back above it for the re-entry there, which is this re-entry in 09. And now we are coming back to tag that. As long as that is holding, one can assume that this is good support on a monthly chart, suggesting that month to month, maybe now the market is changing, and month to month we might be moving higher as long as this line holds. So as long as the line holds on the RSI here on the monthly chart is probably changing now, but within the monthly move there could be pullbacks, and that's probably what the weekly charts are trying to tell us. Because on the weekly for the KOSPI, you can see it's coming back to test a previous break level, and maybe this is where it stalls based on previous action. There was a break somewhere there, and again this happened to be in July, late July or late June, early July for that break there. And since then, around the 50 RSI level on the weekly, this market has struggled. As you can see, we struggled to hold above that level there for those highs right there actually, and then we hit that line there for the highs there. We touched the same level again, which happens to be around RSI 50 and stalled. Again, we came close to 50 and stalled, and now we are coming back to that red line and around RSI 50. I think the mark of a bear market is resistance around the 50 RSI level, and so we can see that there's evidence around here. It would make sense for a pullback. Take a look at the daily, and the daily is also coming back to test a level where it's been stalling. So draw a line around there. This line so happens to be at about 61.8 on the daily RSI, and again, it's been a problem for this instrument. Resistance here for those highs, came close here in December for the highs there, came close here for the highs in July, and also the highs of May came on the same line. So around here it would make sense for there to be some type of resistance. Otherwise, market bulls need to clear that if the market is to see higher prices. If we take a look at the Chinese market, 13 years monthly chart is what we have here. We can see that what we are doing right now is coming back to test the previous breakout. So this breakout on the monthly somewhere here began this very strong surge. So very strong move there. And so what we are doing is coming back to test that break line, and so we can draw a line from there, which is here. So this line right there, that green line, you can see what the market is doing right now. It's come back and it is testing that line. That line seems to be holding. As we can see, this month market has turned positive. So as long as the monthly chart is holding there, again month to month, with this line holding here, it might suggest that month to month now the odds are market can move higher, unless at some point the market eventually comes back and breaks that green line. Right now what we have in front of us is support, so we have to assume that that's what is taking place and respect that. If we test this same line and go backwards, you can see that here in 2006, once we blasted above that green line, the market went on a major run, and so that makes sense that right now we are coming back again. So we had a nice move here after the market held above that green line. So as long as we are bouncing on this green line, one can assume that net monthly charts are pointing to markets that want to move higher month to month. If we take a look at the Nifty, and just like other markets worldwide, we can see that on the monthly charts we are coming back to test this zone that we've been talking about for potential rebound, and clearly it was support here in late 2011, just as we've seen in other world markets. Uniform activity ridge here, support below the green line, back above it. So back, the re-entry there was for a nice re-entry in 09, and also coming off the lows of 03, the market held on that level. Lows of 98 came on the same line, and on and on. So all these major lows have come on this green line. So right now, keep in mind that the line is slightly above 38.2, so the line is legit, and this month we are coming and holding on that line. So as long as that's the case, there is evidence that month to month the market is starting to improve. Problem again, as we've seen in other markets, is if you take a look at the weekly is a little bit questionable because it's coming back to test the recent RSI top line. As you can see, take the highs on the RSI and extend it out. You can see we closed the week exactly on that blue line. So until we can clear that line on the weekly, one can assume that this is where it very easily stalls. If you take a look at a 1-year daily for the Nifty, you can see right now we are actually coming here to test the break of late December. So that break in the RSI did lead to a pullback of some major, relatively major drop there. So after the break, we can draw a line from there, which is exactly where the market has come right now, and is testing that break level. So that could be a problem on a day-to-day basis. We are also around a declining 50-day moving average. So if we show resistance just like we did here, that might be where the market turns around. But we are seeing that the market did close exactly on that red line. In fact, if we test the same line, go backwards, something like that, we can see that this was also resistance around the red line, double top for the highs there. We failed to really hold above the red line there for the highs here, and again also in August for the highs there. Also here the highs came on that red line, which was the highs there sometime in April of 2015. Now if you take a look at a two-year daily chart, so 2 years worth of daily chart action, draw a line connecting the highs, one can see that the market is coming back to test the top side. So this line going back 2 years connects the highs on the RSI, and now coming in that general area to test that. So if we cannot move above that line, then that means that around here there's resistance and the next swing trade is going to be down. Now if you draw a line around the break of December, so the line we just drew somewhere around there, which has been a problem since December and actually going back about 1 year, you can see that here there was a double top around that red line, which actually gave us the actual highs in the market beginning part of 2015. So this is a critical area in the stock, and if it can't move above those two lines, the red line and the blue line, then the next swing trade is lower. Otherwise, if this is a true recovery, then market bulls do need to insist that the market breaks out above those two lines. For now, it looks like resistance. Again, two lines, topside resistance potentially, and also this line right here, which has been a problem over the last year or so. If we take a look at the South African market, which had a nice gain for the week, about 6%. By the way, with about 2 hours to go here, US markets right now do show that they are trading at the highs for the day. So we shall see how we close. So up about 110 on the Dow. But you can see South African market here. Let's go to the long-term monthly chart. And on this long-term monthly chart, you can see that every time over the last, let's call it about 15 years or so, every time the market bounces on this line with uniform action, which happens to be the 50 monthly RSI level, the market makes a nice re-entry. Here we recaptured the level above 50 for this re-entry in 09, and here we are seeing that in 2016 the market has come back and is holding that 50 level. So here another market showing potential month to month for markets to move higher. Yet what is consistent across the globe is the weekly charts are becoming a little bit of a nuisance, because if you take a look at the recent break on this chart, it goes back to the break sometime here. So there's a break right there in May, and after a nice couple of years of a bull market, it broke down in May off the highs there. And so we can draw a line from there, which I call the uniformity line right there. And every time you touch that line with uniform action, it tends to be a sell signal. Uniform action rejection there for the highs there. Here uniform action rejection, you touch a line and was rejected for the highs there, and we did close the week exactly on that red line. Again, if we don't move above that level, then the next swing trade is down. If you take a look at the daily chart and find out where this market made a high, you can see that high came after a break of this line here. In fact, if you take a look close, you can see that there was negative divergence. The market made lower lows. Excuse me. The RSI did not show any improvement here, but price did show a slight improvement. That's negative divergence. But more importantly, we broke through the blue line here, and so we can draw a line from there. And you can see that since the break right there off the highs, every time we hit that level, the red line, and show rejection. Even here it came close enough for the highs there, rejection during this time period for the highs there, and again we are coming back. If we end up showing rejection and back below that red line with uniform action, that tends to be where markets tend to turn around. So all this seems to indicate the daily and the weekly that in the short term it would make sense for markets to pull back, even though monthly charts right now point to month the possibility of markets moving higher. So Again, monthly charts might suggest month to month we are good, but week to week, day to day, there might be a pullback. And that's pretty much what I'm getting from most of the charts that we are looking at. If we take a look at the Nigerian market by way of the ETF, NGE, and to be honest, I don't like to use this ETF a lot because some of these ETFs are not a true representation of the underlying instrument, but we'll take it for now. But what we see here is that yes, after a nice move higher this past week, a little bit of a move higher, we are coming back to test a recent break. So the break there in May brought the market off those highs. We haven't been back there since. Draw a line from there, and you can see that we are coming back potentially to test that red line. The last time we failed to hold above the red line was here in October, and the market did make a move lower since then. We came close here in December for the highs there, and now we are coming here. If we can't move above the red line, then of course the next swing to... Let's take a look at some European markets, and of course we can see that just like other markets that we've seen, on the monthly, the markets look great. If you take this line here, and this line was instrumental since this move here. It's nice breakout in 03, brought the market off the lows. Here we recaptured back above the green line for that re-entry. We touched that in 2011 for the lows there, and now we seem to be forming a nice double bottom on the long-term monthly chart. So month to month, as long as we are holding above the green line, this market should continue to moving higher month to month. Now, of course, we have to be aware that at some point, if the markets turn down and break through that green line, then that's going to be a major sell signal. Right now, we have to go with what we have in front of us, which is that the market is showing double bottom support on the recent monthly chart action on the RSI, and so potentially we might be setting up month to month for markets to move higher. If you take a look at the weekly, we can see there was a recent break again in May, bringing the market off those levels, and so we can draw a line from here, and we see that it is coming back in that general vicinity to test that line there. Also, it closed above 50. Keep in mind, if we move back below 50, one can expect a big down week. Also, take a look at a 3-year weekly chart. So FTSE 3-year weekly chart, take the highs of the RSI over the last 3 years and extend them out. You can see right now we are coming back to test that top side resistance line. If we can't move above that line, then the next swing trade is down. Otherwise, market bulls would like to see this market break out above the blue line. So right now we are back to resistance. Of course, we'll see which way the market goes. On the daily is back to testing this line where it's been stalling. So right there, slightly above that. So we'll see if it can hold. It is encouraging because if it can hold and continue trading above the red line, that's good. Otherwise, if it coils back below the red line, then this is where you'd expect to see the pullback. So either it can hold above the red line and move higher, or otherwise be rejected at that red line and move lower. So short term, as we begin the new week, we might get a clue as to where the next swing trade is going to be. Above the red line is good. Below the red line is obvious resistance, indicating that the market is poised to pull back. If we take a look at the French market on a weekly chart, 2-year weekly, right now we are back to test the top side of this RSI resistance line on the weekly. So we are coming back to test this level. Rejection on this line here shows that the next swing trade is down clearly. Also, if you take a look at the daily, you can see that we are coming to test two lines. Hey, on the top side, there's that resistance potentially right there, connecting RSI highs. Also, there's a line connecting recent break. So once we broke through here in November, that break has been a problem. It was resistance in December for the highs there. Now we are coming back to test that same level. In fact, if you extend the line backwards, it gives you another recent high in August right there. So if we show rejection on this line, then the next swing trade is down. Rejection here would show the next swing trade is down. Otherwise, if we can hold above those two lines, then that would be a breakout, suggesting that the next swing trade is higher. Take a look at the DAX, the German stock market exchange, and here we can draw a line even from here in 03. So we broke out right there in 03 for a nice re-entry there. We recapture that level in 09 for another re-entry there. We tag that for the lows there, and now we are coming there, and for now we are holding above that on a monthly chart. So clearly, as long as the market is holding on that line, we have to assume that this is good enough support and that the next swing trade month to month is higher, as long as the market is holding on that level. Take a look at the weekly, and of course we won't be surprised to see resistance, as we've seen across the globe on many of these markets. It's just a line connecting RSI highs is coming to be tested. If the market cannot move above this line, then of course we struggle for the short term. If you take a look at the DAX daily, go back to this recent break right here. So a break here in August, so we can use that information to test that theory that it seems to stall after that break there. We can draw a line from there, which is the uniformity line. We see that every time we have a reaction back below this line, we have a problem or a reaction or trade down. We broke through the red line for that break, and we've been down since. Rejection on the red line for the highs there. We are coming back to test that level there. Also, if you go backwards, you can see that it gives you this resistance band here for the highs there, and also the break right there for the highs. So that line is legit. If it can't move above that level, of course we can expect the next swing trade to be down. Let's take a look at the Canadian market. And right now about 3.6% gain for the week. Let's go to the long-term monthly view. And the long-term monthly view is coming back to show potential support, as we discussed previously, that this could be where it shows support. So that's a simple line that I drew there, going back to 1990 for the lows there, late 92, early 93 for the lows there, 98 for the lows there. Even here, once we broke out back above that line, the market went on a nice run. We held here, uniform action below the line back above it, so the re-entry is a buy. Double bottom support here for the lows there, and now we are coiling ourselves back above the green line. So again, another market, net, as long as the monthly chart is holding on the green line, net, we are looking at markets that could easily be poised for a multi-month move to the upside. Again, on the weekly, we are having a nice gain for the week, but there's a trap here, in my opinion, or potential for a trap. What is a trap? Because we moved above 50, of course we have the showing of a strong gain. That happens when you move above 50. The problem is, in the coming week, if we move back below 50, then that's going to suggest that that's going to be good for another down week. Okay, so as you move above 50, you get a good reaction to the upside. When you move below 50, you get a big swing to the downside, and so we'll see which way we go. And here we are seeing also it's coming back to test a recent break point. That break point brought the market off the May highs or 2015 highs. Keep in mind that this is something we see in many markets across the globe, and so we can draw a line that happens to be somewhere around the 50. If we show resistance on that line, resistance on this red line and also around the 50 would suggest the next swing trade is down. Let's take a look at the daily chart here, 1 year daily. And I think what's happening here is potentially the market is coming back to test these highs on a sentiment level after the break there. So there was a break there on the RSI. The market hasn't been back to those levels. We can draw a line from there, and you can see that the market is coming back to test this general area. So that could be where it stalls. But if you take a look at a 2-year weekly chart, two-year daily, so 2-year daily chart, this looks good because we are breaking out. And so for now, the question is whether this is a breakout or we fall into a major, we fall immediately into a trap. So this looks good in my opinion. In other words, given the monthly charts being strong, this is a sign that the market could actually eventually be moving higher. Yes, it's not going to be higher every day, but this breakout to me is one that we should respect. Even though we can clearly see that on this 2-year weekly chart, 2-year daily, so 2-year daily, that this is where the market has been stalling. Somewhere around there. You can see there was a break here for the highs, resistance around that line for the highs there, and again uniform activity, rejection for the highs there, and we are coming back here. So we shall see, but I personally don't think it's a bad looking chart on the daily based on the fact that this seems to be a breakout, and that would be consistent with the monthly charts being strong. So we shall see. Of course, I would change my opinion if and when the market moves back below that blue line. If we take a look at the hourly chart, we run into an immediate problem. We are making short-term highs, but the RSI is making a slight low, which is negative divergence. So hourly charts, in my opinion, not very impressive. So maybe the weekly charts are suggesting that the next swing trade is down. Maybe week to week we might pull back, but month to month, markets right now are still holding up pretty good, as we've been discussing. If we take a look at the Brazilian market, which on this monthly chart we can see that, but we can see for Friday's action, it is up another 4.5%, trading at about 49.3. So this chart doesn't show it, but the market is actually trading somewhere here. That's where it's trading. But we can see that it is consistent with what we've been talking about on the monthly charts, support on this line here. Okay, and remember, short term on a month to month basis we've been making lower lows, while the RSI recently showed an improvement. So that positive divergence could be the reason why the market is moving higher, and so it looks good. If you take a look at the weekly, even with the gain, 5% additional gain, bringing the market somewhere there on Friday, so that we can say the market closed somewhere there on Friday. What we can see here, it is coming back to challenge the recent break level here. So it broke here in September of 2014 off the highs recently there. We can draw a line from there, and clearly with Friday's move we are coming back to test what has been a problem. It was a problem here during that movement, and it could potentially become a resistance level around here. So we shall see. Week to week, if it cannot move above this red line, then even the Brazilian market, after a nice move, could actually be showing signs of coming back to resistance and might pull back. Now if we take a look at the daily, we can see that this was the break in May, and for quite a couple months there this has been a problem until now. You can see rejection here for the highs, rejection in November for the highs there, but now we are trading above that red line, which is actually a sign of a market that potentially wants to move higher. So that's pretty good actually. And also we are breaking above the top side RSI line right there, trading above that. In fact, if you go back about 3 years on a daily chart, you can see that this is a very good breakout on the daily chart, going back about 2-3 years. So monthly charts look strong, weekly charts are suspect, but some daily charts are showing improvement. In other words, we have to respect the potential for this market eventually to be higher. Towards the beginning of 2016, lots of markets were breaking down. Right now in February, March time period, looks like some of the monthly charts are improving. So even though week to week we might pull back, just make sure you have stops, because this market month to month looks very strong for now, unless we break through support on the monthly charts. So I leave you here with the S&P 500 having a nice gain for the week, up about 2.9% for the week, and like other markets, coming back to test topside resistance on the weekly RSI. So these markets worldwide are synchronized. We shall see what this means for the SPX as we begin the new week, because if it can't move above the blue line, then week to week the next swing trade is down. Otherwise, bulls would like to see a market continue to press and move above resistance. Since we are closing at resistance right now, we shall see. If we have a stumble around here, and if we move below 50 in the new week, expect a big down week. Eric Muadhed, muadhed.com. Enjoy your weekend. Be on the lookout for part 1 of my US market analysis. As always, peace and blessings. ESS.